Day 2. Weekend 2. Put this bitch over there. There we go. Money. More study time. More study time. I tell y'all, man, yeah, this is it. This is the video. This is all we gonna get for the next few months. This is all we gonna get. Study time. But yeah, while I'm studying, I can answer questions. But this is it. I still didn't get that book for Ray Dalio yet, cause I ain't even finished this book yet. But I'm about done. I'm about done.
256, the daily
But
trading
yeah,
launch.
I'm gonna let you guys ride out with me.
Capture the relative movements of asset classes. When the economy weakens and the Federal Reserve has to lower interest rates, this has implications not only for how bonds trade, but also the US dollar. Lower rates and a weaker dollar might also support the prospects of companies that do business overseas, as their goods will be cheaper for consumers in other countries. That situation might set up some promising stock market ideas. Track rises and falls in correlations among sectors and markets is a great way to detect emerging themes, and ones that are shifting. Short-term traders can detect themes from how markets trade in Europe and Asia before the US. $256, the daily trading coach. Other intermarket themes capture the relative movements of asset classes. When the economy weakens and the Federal Reserve has to lower interest rates, this has implications not only for how bonds trade, but also the US dollar. Lower rates and a weaker dollar might also support the prospects of companies that do business overseas, as their goods will be cheaper for consumers in other countries. That situation might set up some promising stock market ideas. Track rises and falls in correlations among sectors and markets is a great way to detect emerging themes, and ones that are shifting. Short-term traders can detect themes from how markets trade in Europe and Asia before the US markets open. Are interest rates rising or falling? Commodities? The US dollar? Are overnight traders behaving in a risk-averse way, or are they buying riskier assets and selling safer ones? Are Asian or European markets breaking out to new value levels on their economic news or on decisions from their central banks? Often, these overnight events affect the morning trade in the United States and set up trade ideas about whether a market is likely to move to new highs or lows relative to the prior day. The short-term trader can also develop themes from breaking news and the behavior of sectors that are leading or lagging the market. If you keep track of stocks and sectors making new highs and lows often, you will highlight particular themes that are active in the market. If oil prices are strong, you may notice that the shares of alternative energy companies are making new highs. That can be an excellent theme to track. Similarly, in the wake of a credit crunch, you might find that banking stocks are making new lows. Catching these themes early is the very essence of riding trends. After all, a theme may persist even as the broad market remains range-bound. As your own trading coach and the manager of your trading business, you need to keep abreast of the marketplace. That means that considerable reading and observation must accompany trading time in front of the screen. On my blog, I try to highlight sources of information that are particularly relevant to market themes. I update those themes daily with tweets from the Twitter messaging application, www.twitter.com/steambat. Ultimately, however, you need to figure out the themes that most make sense to you and the sources of information for generating and tracking those themes. The more you understand about markets, the more you'll understand what is happening in your market. Like a quarterback, you need to see the entire playing field to make the right calls. It's too easy to be blindsided by a blitzing linebacker when your gaze is fixed.
I think the internet's off, man. Internet, the Wi-Fi ain't that damn good.
Coaching your trading business 257 coaching Q. It is particularly promising to find themes that result from a particular news catalyst. For instance, if a report on the economy is stronger than expected and you see sustained buying, track the sectors and stocks leading the move early on and consider trading them for a trending move, especially if they hold up well on market pullbacks. Many of those themes can run for several days, setting up great swing moves. Lesson 80. Manage the trade. Business success isn't just about the products and services a firm offers to the public. Much of success can be traced to the management of the business. If you don't hire the right people, supervise them properly, track inventories, and stick to a budget, you'll fail to make money with even the best products and services. So it is with trading. The best traders I've known are quite skilled at managing trades. By trade management, I mean something different from generating the trade idea and executing it. Rather, I'm referring to what you do with the position after you've entered it and before you've exited. Your first reaction might be, you don't do anything. It's certainly possible to enter a position and sit in it, waiting for it to hit your profit target or your stop loss level. That reaction, however, is inefficient. It's like selling the same mix of products at all stores, even though some products sell better and some sell worse at particular locations. To appreciate why this is the case, consider the moment you enter a trade. At that point you have a minimum of information regarding the soundness of your idea. As the market trades following your entry, you accumulate fresh data about your idea. The action is either supporting or not supporting your reasons for being in the market. For instance, if your idea is predicated on falling interest rates and you see bonds break out of a price range, that would be supportive of your trade. If you anticipate an upside breakout in stocks and you see volume expand and the New York Stock Exchange tick move to new highs for the day on an upward move, that is similarly supportive. If you track market action and themes while the trade is on, you can update the odds of your trade being successful. Trade management is the set of decisions you make based on the fresh information that accumulates during the trade.
So tomorrow morning, I gotta get up at 5 my time. Stock market crank up around 4, 8. It just depends on what stock is running. Some stocks they run 4 o'clock in the morning. But I'm gonna be up at 5 my time. And before I go to bed tonight, I'm gonna make my watch list, right? Watch list is just stocks that might be setting up. When I mean set up, like they might be breaking. They could be breaking out from a sideways action, or they topping out, or they might break out. So I'm just gonna pick some stocks. One of the stocks that I'm gonna be looking at on that watch list is XNET. XNET is a runner. That motherfucker, you make 5 times, 7 times, 10 times your money on that stock. But it's just a high price stock, you know what I mean? It's like $25 right now, $24. So to buy 100 shares, it costs you $2,500 to get in that. But if you were to buy 100 shares, right? If you were to buy 100 shares, if you were to buy 100 shares on a $25 stock, damn man, this thing's a piece of shit. If you were gonna buy 100 shares on a $25 stock, and that stock moved 5 times your money, 4 times your money, 10 times your money, it runs 10 times your money, that's $1,000. It runs 7 times, $7, that's $700 just on 100 shares. 100 shares in this game ain't a lot, man. But it would have cost me to get in that like $2,500, just to get in that position, to have 100 shares in that stock. So to be honest, man, I'm just gonna be looking at XNET. Like when I get done with these books and some of these videos tonight, I'm gonna see if I can find a few stocks that I can fuck with. I'm only gonna fuck with only about 8. I'm gonna find 8 stocks that I like, put some alerts on them, and in the morning I ain't gotta keep watching them. You know what I mean? If the alert hit, I'll just go ahead and click on that stock, because I got a price alert. So if it hits that price that I'm looking at, boom, the alert show up on my scanner, and then I can go ahead and click on the stock and be like, all right, look, this bitch is ready to do it. Ready to do what I put the alert for. If I put the alert, usually it's breaking out onto new highs or breaking out from some sideways action. It doesn't matter. Either way, I put the alert for a reason, to let me know, hey, look, so I ain't gotta sit there and watch the motherfucker. So I'm only gonna find like maybe 8 stocks that I'm looking at, and that's it for the day. And then I'll run some stocks tomorrow morning. I'll run a scanner to see what's picking up on. I'm looking for stocks that are running 3%. High, like they're doing 3% moves. If a stock does a 3% move, it'll come up on my scanner, and I'm looking at that motherfucker. I'm watching that bitch, seeing what it's doing. Or I'm just looking to see what the chart looks like, see what the price action looks like. If it looks good, it's got volume, shit, I'm in it. I'm gonna look at it, I'm gonna see what it can do. But that's pretty much it. That's all I'm doing for today. That's all I'm doing today. Yeah, but for the most part, we're studying. So if you want to hang out, we can hang out. You guys got questions? I'll answer questions while I'm studying. Multitasking. We're multitasking.
Coaching your trading business 257 coaching Q. It is particularly promising to find themes that result from a particular news catalyst. For instance, if a report on the economy is stronger than expected and you see sustained buying, track the sectors and stocks leading the move early on and consider trading them for a trending move, especially if they hold up well on market pullbacks. Many of those themes can run for several days, setting up great swing moves. Lesson 80. Manage the trade. Business success isn't just about the products and services a firm offers to the public. Much of success can be traced to the management of the business. If you don't hire the right people, supervise them properly, track inventories, and stick to a budget, you'll fail to make money with even the best products and services. So it is with trading. The best traders I've known are quite skilled at managing trades. By trade management, I mean something different from generating the trade idea and executing it. Rather, I'm referring to what you do with the position after you've entered it and before you've exited. Your first reaction might be, you don't do anything. It's certainly possible to enter a position and sit in it, waiting for it to hit your profit target or your stop loss level. That reaction, however, is inefficient. It's like selling the same mix of products at all stores, even though some products sell better and some sell worse at particular locations. To appreciate why this is the case, consider the moment you enter a trade. At that point, you have a minimum of information regarding the soundness of your idea. As the market trades following your entry, you accumulate fresh data about your idea. The action is either supporting or not supporting your reasons for being in the market. For instance, if your idea is predicated on falling interest rates and you see bonds break out of a price range, that would be supportive of your trade. If you anticipate an upside breakout in stocks and you see volume expand and the New York Stock Exchange tick move to new highs for the day on an upward move, that is similarly supportive. If you track market action and themes while the trade is on, you can update the odds of your trade being successful. Trade management is the set of decisions you make based on the fresh information that accumulates during the trade.
Over $500 for these ratchets, wrenches, and sockets. That's not just more tools for the money.
258 The Daily Trading Coach. One way that I see traders utilizing this information is in the way that they sail into trades. Their initial position size might be relatively small, but traders will add to the position as fresh information validates their idea. My trading capital per trade idea is divided into 6 units. I typically will enter a position with 1 or 2 units. Only if the idea is finding support will a 3rd or 4th unit enter the picture. I have found that, if my trades are going to be wrong, they're generally wrong early in their lifespan. By entering with minimal size, I incur small drawdowns when I'm wrong. If I add to a position as it is finding support, I maximize the gains from good trades. This trade management, I find, is just as important to many traders' performance as the quality of their initial ideas. Indeed, I've seen traders throw lots of trade ideas at the wall and only add capital to the ones that stick. The management of their trades makes all the difference to their returns. Such trade management means that you have to be actively engaged in processing information while the trade is on, not just passively watching your position. Good trade management is quite different from chasing markets that happen to be going in your favor. It is a separate execution process unto itself, in which you can wait for normal pullbacks against your position to add to the position at favorable levels. If you are long, for example, and the market is in an uptrend, the retracements should occur at successively higher price levels. By adding after the retracement, you gain the profit potential when the market returns to its prior peak, but you also ensure that risk-reward will be favorable for the piece of the trade that you're adding. Each piece added to a trade needs a separate assessment of risk and reward to guide its execution. While I'm in a short-term trade, I'm closely watching intraday sentiment for clues as to whether buyers or sellers are more aggressive in the market. I will watch the New York Stock Exchange tick, the number of stocks trading on upticks minus those trading on downticks, and I will track the market delta, www.marketdelta.com, the volume of ES futures transacted at the market offer minus the volume transacted at the market bid. These track lines tell me if the balance of sentiment is in my direction. If the sentiment turns against me, I may decide to discretionarily exit the position prior to hitting my stop loss level. That, too, is part of trade management. To be sure, it is risky to front-run stop levels. It invites impulsive behavior whenever markets tick against you.
So the reason the rich are getting richer is they use debt and pay less in taxes legally.
Even before your book came out, being debt, it didn't make sense to me when I was like 14 years old, but that's what they're doing. But they teach us to go into debt and just to them for nothing instead of using the debt to build stuff.
Yes. You should use debt. I mean, you have to have financial education to use debt because it's dangerous.
If you go back in time, we had super ultra rich, but maybe they had a third of the wealth or 20%. Now it's 70.
Hey, what's up, girl? Hey, what's going on, man? What are you doing? My nephew.
What are you doing?
Nothing, man. Studying. What are you doing?
Watching a movie.
Yeah.
What
What?
are you watching?
Nah, I'm just studying, man. Trying to make this money.
What were you gonna say before I said what do you do?
The what?
What were you gonna say to me?
Nah, none. No, I'm just trying to make this money, boy. Just studying. Where's your sister at? Where's everybody at?
She has a friend and her name is Whitney, so her and Whitney are in Atlanta's room.
Oh, okay. That's cool.
So, how much money did you make at first?
Well, I broke even last week, and I probably made like a few hundred. Yeah, I broke even. It means I didn't lose money. I kind of like neutral. But I probably made a few $100. Nothing big, nothing crazy. Hopefully this week will be better. We'll see. Yeah, we'll see.
Wow,
Yeah.
that's a lot.
Mm-hmm. So you guys watching the movie, huh? Well, hey, do you have the Lego game? They got a Lego Batman game. You got that? You want that or what? What's going on?
Yeah, I definitely want that game.
Okay. What are you playing on that? Nintendo or PlayStation or Xbox?
I think it's Nintendo.
No. What are you playing? You playing the PlayStation or the Xbox One, the one I gave you?
Well, Hannah has the Xbox One.
Oh, okay. And she play with it? She play?
No,
Oh, she doesn't play it?
yeah, she never played that.
Hmm.
Can you buy me that for Christmas too?
What do you want? You want an Xbox One?
No,
The Lego game?
yeah.
Yeah, but what console? What console you using? Nintendo or PlayStation? What game?
I'll ask my mom. They have a Lego Batman game. Is it Nintendo X?
No, I need to know what are you playing when you go in the room to play? Are you on Nintendo or the PlayStation? I'll figure it out. No biggie. Well, hey, man, let me get out of here. I got to study, buddy.
Okay, bye.
All right, love you, man. Bye. My little nephew. Jerry, you welcome, man. Yeah, bro, this is all about money, man. This channel is about motherfucking money. It's all about money. Yeah. It's all about money, man.
Coaching your trading business 259 that we will not trend higher. By proactively exiting the position, I save myself money and can position myself for the next trade. What this suggests is that it is important to be right in the markets, but it is even more valuable to know when you're right. Very successful traders, I find, press their advantage when they know they're right, and they're good at knowing when they're right. This means that they are keen observers of markets in real time, able to assess when their trade ideas, their hypotheses, are working out and when they're not. They are good traders because they're good managers of their trades. Your assignment for this lesson is to assess your trade management as a separate profit center. Do you scale into trade ideas? Do you act aggressively on your best ideas when you are right? If you're like many traders, this is an underdeveloped part of your trading business. It may take a return to simulation mode and practice with small additions to trades to cultivate your trade management skills. It may also mean that you structure your time while you're in trades, highlighting the information most relevant for the management of your particular idea. Most of all, it means cultivating an aggressive mindset for those occasions when you know you have the market nailed. As your own trading coach, you want to make the most of your assets. It's easy to identify traders who exit the business because they lose money. It's harder to appreciate the equally large number of traders who never meet their potential because they don't make the most of their winning ideas. A great exercise is to add to every position at least once on paper after you've made your real money entry. Then track the execution of your added piece, its profitability, the heat you take on it, etc. In short, treat trade management the way you would treat trading a totally new market, with its own learning curve and need for practice and feedback. You don't have to be right all the time. The key is to know when you're right and make the most of those opportunities. Coaching Q. Track your trades in which you exit the market prior to your stops being hit. Does that discretionary trade management save you money or cost you money? It's important to understand your management practices and whether they add value to your business. Resources: the Become Your Own Trading Coach blog is the primary supplemental resource for this book. You can find links and additional posts on the 260 The Daily Trading Coach. Topic of coaching processes at the homepage on the blog for Chapter 8. http://becomeyourownTradingCoach.blogspot.com/2008/08/daily-trading coach chapter 8 links.html. Jim Dalton's books are excellent resources when it comes to develop. I'm a conceptual framework for trading. I recommend Mind Over Markets as a first read, then Markets in Profile. Both books are available on the site where Jim and Terry Lieberman offer training for developing traders. www.marketsinprofile.com. An excellent book on risk and risk management is Kenneth L. Grant's Text Trading Risk, Wiley, 2004. Exchange Traded Funds, ETFs, are an excellent tool for achieving diversification. Two good introductions to ETFs are David H. Fry's book Create Your Own ETF Hedge Fund, Wiley, 2008, and Richard A. Ferry's Text the ETF book, Wiley, 2008. I receive a number of questions regarding seminars, courses, and other resources that are offered for sale under the general rubric of trading education. My impression, and the feedback I get from blog readers, is that these offerings are often expensive and of limited relevance to the particular strengths and interests of individual traders. Similarly, I receive many inquiries into proprietary trading firms, which allow traders to trade the firm's capital in exchange for a share of profits. Some of these firms are quite professional and ethical, others are not. I strongly encourage due diligence. Talk to a number of people who have taken these courses or who are trading at these firms. If you cannot get direct feedback from actual users, not just one or two stooges, move on. Don't pay thousands of dollars for something unless you know exactly what you're getting. Chapter 9. Lessons from Trading Professionals, Resources and Perspectives on Self-Coaching. Anyone who fights for the future lives in it today. A.Y. Rand. In this chapter, I sought the perspectives of experienced traders who share their views on the web. The question I asked them was simple. What are the 3 things you have found most helpful in mentoring coaching yourself as a trader? I think you'll find their outlooks worthwhile, and I know you'll benefit from checking into the resources these traders provide. To coach yourself, you don't need to reinvent wheels. The guidance of those who have come before you can be invaluable. Think of this chapter as lessons in the best practices of self-coaching. Look for the themes emphasized by a majority of the contributors. These themes include the best of the best practices. Lesson 81. Leverage core competencies and cultivate creativity. We encountered Henry Karstens when we took a look at profits and losses as a function of one's trading metrics. Henry's website, www.verticalsolutions.com, is filled with valuable information for discretionary traders. 261. The Daily Trading Coach. But his distinct specialty is the design of trading systems. Henry eats his own cooking. He builds and trades his own systems, manages money for clients with his systems, and develops trading systems for other traders and trading firms. When I posed the question to him of what he has found most helpful in coaching himself, he quickly offered 3 responses. 1. Leveraging core competences and interests. 2. Learning about learning 3. Collaboration and work ethic. Let's take a look at each. From childhood, Henry learned about building and the use of machinery from his grandfather, Floyd Graham. I am, and have always been, a heavy equipment operator, Henry observes. Out of his fascination with machines and moving things around, Henry tried his hand at a different kind of building. He built a machine that traded. After building several such machines, he figured out a way to quantify rates of change in market behavior. When he tossed aside all but one of his machines, Henry developed others, so that his machines would never rust and become obsolete. His core competence and interest is building. Markets just happen to be the earth he is currently moving. Henry leveraged what he knows and loves and found success and fulfillment. Success is found by leveraging distinctive interests, talents, and skills. Doing what you love, and doing what you do well. Note, however, that the flip side of building is destroying. Sometimes you have to take down a structure to erect a new one. You have to remove a mound of earth to lay a foundation for something new. It was Henry's willingness to put aside his old machines and develop new ones that provided him with his edge. It's not about finding a perfect system and taking cash from it like an ATM. It's about having the integrity to acknowledge when ideas are no longer working and having the desire to be the best machine operator possible. With respect to learning about learning, Henry credits his chess lessons with Grandmaster Nigel Davis for helping him become sensitive to patterns and their nuances. What I learned from those lessons was the power of nuance, the cascading insights brought by experience and the continuous pursuit of a single objective. He explains, Henry has learned to scan markets like he scans a chessboard for moves. I continually search for the next insight now, the nuance that means just a bit of an edge for just a little while longer. Lessons from trading professionals 263. I've observed this interdisciplinary cross-fertilization among many successful traders. Those traders with mathematical backgrounds learn to quantify value and divergences from value. Those with athletic training use their experience to guide their training and direct their competitive drive. My own work in psychology has sensitized me to the ways in which human behavior is patterned. This work has been a tremendous aid in recognizing similar patterns in markets. Coaching yourself begins with knowing yourself, and especially knowing your distinctive strengths, how you best process information, how you think, what you love. It is difficult to imagine being successful at trading if your market activity does not tap into these core competencies and values. Finally, Henry identifies collaboration and a strong work ethic is key to his self-development. A diverse network of people with broad and similar interests in trading both pushed and supported me. Henry explains, the very strong work ethic I got from my grandfather always makes me do just a little bit more. The keys here are that the network is diverse, providing input from many angles to aid creativity, and the network is both challenging and supportive. I've often been asked why I don't charge money for my blog content. The answer is that, in developing a community of readers, I also cultivate the diverse network described by Henry. Readers push me to think more deeply about markets, and they support my efforts at learning more. All of us tend to fall into the trap of operating within our comfort zones. We benefit when those who care about us also push us to move beyond those self-imposed boundaries. Like many successful creative individuals, Henry exemplifies what I call an open source approach to networking. When others share ideas and research with him, he freely passes his work on to them. This approach is very common among professional portfolio managers, particularly the successful ones. A surprising number of traders, however, are convinced that they must keep their work secret. The result is that they become isolated and stagnant. When a colleague sends me something that I build upon or that sets me off on a new and interesting direction, I always try to reciprocate with a relevant finding or study as way of thanks. Henry points out, what I give up in secrecy comes back manifold in strong relationships and flow of ideas that are the lifeblood of the creator. The trader must be a creator if his business is to avoid stagnation. I cannot emphasize this latter point strongly enough. As a trader, you are only as strong as your flow of ideas. Those ideas are your lifeblood, the novel mutations that will enable you to evolve and adapt to changing market conditions. Success in trading is a kind of evolution. Without creativity.
Sound like I'm almost done with this book.
264 The Daily Trading Coach. And the ongoing flow of ideas. Extinction is a real threat, as it is for any business that fails to keep up with the marketplace. Your assignment for this lesson is to set a goal and plan for becoming just a bit more creative in your approach to markets. You don't have to be a system developer to learn about learning. Build upon your distinct type strengths, and fertilize your creativity within a network of colleagues. For your assignment, I encourage you to add just one source of new ideas that will add to and challenge your own. This source can be a website, a newsletter, or a peer trader, but it should be a source that you can consult as a regular part of your generation of trading ideas. Henry freely shares his experience on his site, including a framework for testing trading ideas. Making use of the fruits of his self-coaching will be invaluable for your own. Coaching Q. When we're successful, our work expresses who we are. Henry emphasizes that he is a builder and creator. How does your trading express who you are, your greatest talents and interests? Identify the recent times in the markets when you have been your happiest and most fulfilled. What made those times special? How can you bring those special elements into your trading more regularly? Lesson 82. I alone am responsible. Chris Cernich, author of the Globetrotter blog, www.globetrotter.blogspot.com, was one of the first contributors I considered for this chapter. Uniquely among market writers, Chris is sensitive to the psychology of trading. His blog consistently combines market insights and psychological ones. It's a useful resource. I posed a 3-pronged question to Chris, asking him what has been most helpful for his self-coaching as a trader. The floodgates opened and Chris came up with 10 ideas, not 3. His response was so well considered that I decided to summarize all 10 of his insights and their implications for self-coaching. 1. Being able to observe himself. 2. Discipline. 3. Having an edge.
Yeah, this book's about done. They ain't talking about shit now.
Lessons from Trading Professionals 265. 4. Accepting that I alone am responsible. 5. There is no holy grail. 6. Have interest in myself. 7. Being able to stand up again after being beaten down. 8. Being lucky from 10 at a time. 9. Keeping a trading journal and reading a blog. 10. Don't panic. Building the external observer. The external observer is a concept I came across after reading your first book. Chris explains, it allows me to see myself trading, to observe and interact in case I'm in a position from a teacher's perspective. It allows me to argue about my trade, to see the pros and cons, to notice price behavior I might miss otherwise. It's an invaluable resource in a trade because it is not affected by emotions and will guide me. Even in a fast-moving market, I rely on it to to always know what I should do. I might override it, but it is the clear voice in a turbulent market, where I can always turn to find the safe way out. Maintaining discipline is so elusive, so difficult to maintain, and yet it is something without which you won't succeed at trading. Chris explains. Am I a disciplined trader? Alice, no. Unfortunately not. But after all these years I have learned that I have to follow certain rules or I will do a lot of damage to my account. Let's look at a concept that every trading book tells you is wrong and will lead to disaster. Adding to a losing position. Admit it. You have done it at times, because you were certain that you were right and the market was wrong. My biggest loss came from adding to a losing position. Still on a range day, adding to a losing position is the way to trade, because otherwise, you will die the death of 1,000 stops. Yes, I add to losing positions, but now I have the discipline to stick to the twice wrong and I'm out rule. Meaning, if the add-on does not work, I'm out. Of course you can be wrong and the trade signal might go against you, but if you have 2 signals in a row that go against you, then you have to take a step back and see why your signals aren't working properly. Rules promote discipline. 266 The daily trading coach having an edge without an edge you are doomed. Chris asserts. Very simple. Of course you might throw a coin and trade a 50 hours and 50 minutes chance system, but only a professional will have the discipline to stick to the necessary money management rules to trade a 50 hours and 50 minute system successfully. Having an edge means you can statistically prove that your trading system works, that it would have paid your commissions and costs of doing business and made you profits in the long run. You might be a mechanical trader. You might trade fundamentals. You might trade price action or some arcane indicator or a combination of all of them. It all comes down to one thing only. You must be able to prove to yourself that your trading system works and will make you profits in the long run. If you can prove that to yourself, if you don't understand the mechanics behind your trading system, then you won't trust your trading system and you will not be able to trade it. The best trading system will produce losses in the hands of a trader who does not believe that trading system works. I alone am responsible. I came to trading because I came into real financial difficulties after some clients of mine went bankrupt and did not pay their bills. Chris recounts. Trading seemed the solution to me, because only trading gave me the promise of instant payment, of knowing that when I did it right I would get paid. But that promise came with a responsibility I did not fully understand. I alone am responsible for any action taken. There is no one but me to blame. If I have a red day, a red week, a red month or year, each and every day I can look back and tell you where I was wrong, what trade I should have taken, where I missed the opportunity to make it back. It's only me who is responsible, and if I alone am responsible, then there can't be any guru to whom I can turn to tell me what to do. I trade my system. I can tell you what I do, but whether you will be able to use that knowledge depends on you alone. The need for a guru confesses an absence of self-guidance. There is no holy grail. The charts of the best traders have price bars only, or they trade without charts at all. Like many forex traders, Chris explains, they are not. Lessons from trading professionals. 267 magicians, but they follow the price of the instruments they trade for such a long time. They no longer need indicators or charts, but if you ask them, they will tell you that there is divergence on price and that a bottom or top might be near, that right now will be a great buying or selling opportunity. All these traders have looked at charts. They have used all the common and not so common indicators or oscillators or volume analysis, and after a while they removed them from their charts until they were back at the beginning looking at a bear chart. But now, knowing that there is no holy grail among these indicators, nothing will give you 100% winning trades, so it's futile to search for it. You need to focus your efforts somewhere else to succeed. Having trust in yourself. I'm a discretionary trader, Chris points out. This means that I have certain trade rules, which provide me with a trade setup, but I decide on a, let's call it gut feeling, whether I take the trade or not. I have tried a few times already to build a successful mechanical trading size 10, but I was never able to boil my trade rules down to a mechanical system that I could trust enough to trade. On the other hand, I have accepted that my subconscious mind is a better computer than my mechanical skills will ever be. Maybe if I tried my hands at neural nets, I could come up with a working mechanical trade system, but then I would not understand the rules any longer, and that means I would not trust it enough to trade it. The subconscious mind will not give clear instructions. It communicates through feelings. You need to learn to listen to them if you want to use its power, but if you do, it can be a nearly unlimited resource you shouldn't ignore. To teach or program your subconscious mind to do its job, you need to invest a lot of screen time. You need to expose it to as many situations as possible to develop that trust in yourself. The trust that you will always do what's right for you. If you don't trust yourself or your methods, you will not find the emotional resilience to weather periods of loss. Standing up after being beaten down, being bankrupt, having a real bad day. Yes, it happens. Chris explains. Many traders trading for their own account will have gone through such a slump not once but multiple times before they managed to develop their account. When I started trading, I had lost a huge amount.
Sounds like me. Lost a lot of money.
268 The daily trading coach of money and funds. I had trusted the fund managers to do a good job. Instead, they did a lousy job and I decided I could do better. It wasn't easy. Somewhere I read that if you can trade one futures contract successfully, why do you think you can trade 10 contracts successfully? That was a statement I could accept and actually still follow to this day. So I gave myself a $3,000 account and started trading futures. I never encountered the problems I had in my trading when trading in demo mode, so I traded real most of the time. I went bankrupt, actually below $2,000, which was the limit I had to maintain to continue trading, at least 5 times. I funded my account with about $20,000 over the last 7 years and made it all back within 3 months. When I finally got it right, I'm not out of the woods today, but I have started taking out money for my living from my account. I still have days where I screw up big time and need to build myself up again, where I need to question my plan, myself, and my approach to the markets. But I know today that I can trade and that I have an edge. I trust myself to do what is necessary to do. Even when I screw up, I know I will stand up again and make it back. Mastering great challenges yields great confidence. Luck. There is no room for luck in trading? Don't believe that for 1 second. Chris asserts. How many trades did you do and looking back you know you were just lucky to get out break-even or make a huge windfall profit? I always think I'm entitled to 2 or 3 lucky trades per month, but make sure you know you got away lucky. Don't bask in the glory of that wonderful wonderful trade, when all you did was violate your rules, add to that lousy entry, and then have the luck to ride a spike against the prevailing trend right to the tip. Keep a detailed trade journal and write a blog. You need to be totally honest with yourself. Chris advises, there is no rock to hide under if you screw up. It shows in your account and you need to document it. Otherwise you will do the same mistakes over and over. Believe me, you will still do the same mistakes over and over again, even when you write a journal. But at least now you know you made the same mistake again. A trading journal can provide you with the statistics necessary to develop trust in yourself. It will tell you if you have an edge. It can tell you which approach to the markets works.
Shit.
Lessons from Trading Professionals 269, and which was a big failure. The trading journal I use today goes back more than 4 years now, and I made about 5,500 trades in that time. It is an invaluable source of information about myself and the ways I handle certain types of markets. If I encounter a rough patch in the markets, I can look back and see if I had a similar experience in the past. I can see how I handled the situation then, whether my solution was successful, or whether I should better try a different approach today.
Yeah.
Usually before I screw up big time, I have a few days with smaller and smaller profits. Looking back, I see that I felt insecure in the markets. Something was changing and I was not changing with the market. So I struggled to keep the green until something snapped and suddenly I was totally and absolutely wrong. The next day or two, I often make it back before I have a second deep red down day. After that, I usually get back on track with smaller profits. The account starts to consolidate before I manage the next trend move. Writing the Globetrotter blog I maintain to this day has made me accountable. I started the blog because I hoped that by sharing my approach to the markets, older, wiser traders would read it and question me or point me in a different direction by commenting on my ideas. Fortunately for me, some of the comments I received proved invaluable and are now an integral part of my trading system. You don't need to write a public blog, but writing about your thoughts in a trade, how you see the markets, or what constitutes a trade setup structures your approach to the markets. Right now I'm at a point in my development as a trader where I try to dissect that gut feeling I wrote about earlier, so I can consciously see why my subconscious mind just gave me a clear go ahead and take that trade signal, or why it just questioned an otherwise wonderful looking signal and is proven right a minute later. By writing about these trade setups, I can relive the feelings I had when the trade opportunity presented itself in real time. Eventually I can see why the trade setup actually was not an opportunity. The blog is also the place to deal with all the demons and obstructions you will encounter in your trading. Writing about the problems is the first step to solving them. As long as you have no mechanical automated trade size 10, you have to accept that you are human and will make mistakes. You need to deal with them and you will have to find ways to avoid or integrate them or you will not make it in trading. But the first step is always to bring them in the open, so they can no longer hide. Start a blog is a great way to journal your ideas and interact with others about them.
Yeah, this thing ain't talking about shit now. This book need to be heard and be over with.
270 The Daily Trading Coach. Don't panic. These are the famous words found on the cover of The Hitchhiker's Guide to the Galaxy by Douglas Adams. Chris explains, they are so true in trading. If you panic, your instincts take over, and these instincts will surely cause the maximum possible damage to your AC count. If the market suddenly starts to drop big time and you are long, don't be frozen. Believe what you see and act, or decide not to act and execute your contingency plan. You need to have a plan for every situation. Usually you will pay for every lesson the market gives you. How much you pay is totally up to you. So if I'm suddenly in an unwanted position, I look at the chart and see if I like the position or not. If not, I'm out. Simple as that. Otherwise I manage the trade, but never ever allow panic to take over. Chris's lessons are the result of hard-won experience. His attitude of taking full responsibility for all aspects of trading lies at the heart of self-coaching. You are the author of the story of your trading career. Your AC shines will determine the plot and ending of that story. One of Chris's lessons that I like best is the notion of standing up after being beaten down. His success came as a result of resilience. He lost small amounts of money many times before he started to trade well and trade larger. Your assignment for this lesson is to create a disaster plan for your trading that explains how and when you will cut your trading size risk when you are not trading well, but also how you will stand up and persevere with your best trad. Ideas to bring yourself out of drawdown. The best traders are quick to pull in their horns when they're not trading well, but they are not quick to give up on their trading. If you develop and follow your disaster plans, you take responsibility for your trading and place yourself in control of your market participation. As Chris notes, we cannot repeal uncertainty, but we can avoid the poor decisions that come from panic and lack of preparation. Coaching Q. Make sure your trading journal highlights important lessons learned, so that it becomes a constructive tool for review months and years later. The value of a journal is in its review, not just its initial writing. If you ensure that every journal entry has a lesson for the future, you also ensure that today's learning can enrich tomorrow.
No Chinese. I'm actually gonna make Thai food today. Make Thai food tonight in that pressure cooker. Thai food. I mean, no, man. We ain't doing no Chinese food. No Chinese tonight. Thai food tonight. Oh shit! I don't want that. Thai food tonight. Chicken curry. Chicken curry, man. That's what I'm making. What you making? What you guys making tonight for dinner?
Lessons from Trading Professionals 271.
What you guys making for tonight for dinner?
Cultivate self-awareness. Trevor Harnett enjoys an interesting perspective on the trading world. He is a seasoned trader, and he is someone who runs a software firm that provides tools for traders. As a result, he has observed his learning curve, but also the curves of traders who utilize his Market Delta software, www.marketdelta.com. While Market Delta incorporates a number of charting features, the heart of the program is its ability to separate volume traded at the market's offer price and volume transacted at the bid. This distinction enables traders to obtain instantaneous readings of short-term sentiment. This is very valuable for intraday traders, and it provides a useful execution tool for longer time frame traders. Michael Sinetza is a full-time trader and author of the Trader Mike blog, www.tradermike.net. When I first entered the world of blogging, Michael's was one of the very first blogs I read regularly. It seemed to me that he had a fine grasp for short-term trading, including the news items that move markets. His blog posts the stocks he's following for the day, as well as market and news updates. Michael keeps it real. His site is devoid of hype and self-promotion, which helps account for its popularity. I grouped Trevor and Michael together for this lesson because they both touched on an important facet of self-coaching, being self-aware and acting as one's own psychologist. When I asked Trevor for the 3 things that have most contributed to his self-coaching, he replied, upon looking back at my trading career, the 3 factors that have influenced my trading the most are 1. The environment I put myself into, 2. The discipline I exercised as a trader and elsewhere in my life, and 3. Self-awareness in terms of personality and how I view the markets. Let's take a look at those. Environment. When Trevor started trading, he made sure that he was close to the AC Cheyenne and rented an office in the Chicago Mercantile Exchange building. I had plenty of desire but little knowledge and few friends or mentors to show me the way. Trevor explains, being in an environment with lots of seasoned traders was important to me. Trevor learned most from these traders' mistakes. A majority of what I learned by being around other traders was what not to do. Trevor pointed out, I learned valuable lessons from other traders, but the lessons that have kept me trading over the years are the lessons I learned from other traders on not what to do. For me, being in an environment that...
Click that link, and that'll show you how to get started and start making money. But it's gonna take some time, man. You gotta study. You know, it's gonna take some time, man. You gotta study your motherfucking ass off. Gotta study your motherfucking ass off, boy. But you know what? You can study. You gotta study in anything you do, right? Whether you're trying to drive a truck, whether you're trying to go to school, you know. I don't know, whatever you want to go to school for, you got to study, right? Well, they ain't gonna pay you what this bitch over here pay you, what these stocks gonna pay you. So yeah, click that link, man, and you'll get started.
272. The Daily Trading Coach consisted of more than just my own experiences, increased my rate of learning tremendously. I was able to share in others' successes and defeats and learn from what they did right and wrong. To me, this was invaluable because some of the experiences they had to endure were ones that I hoped to never find myself in. I could see what happened and try and learn from the situation. I find this theme again and again with successful professionals. Much of their success comes from the accelerated learning curve afforded by being in the right settings. Trevor's experience suggests that it's not necessary to be employed by a trading firm to find that environment. Just being around experienced peer professionals can multiply learning experience. If you want to experience yourself as successful, place yourself in settings and situations where you can interact with successful people. Self-awareness. Trevor emphasizes the importance of knowing yourself as a trader. For me, he explains, when I entered into trading in 1998 after graduating from college, everyone was telling me pit trading was what I needed to do. I had always been much more of an introvert and very proficient on the computer. He quickly found pit trading not to his liking and became involved in the emerging electronic Globex trading platform. He also recognized that his trading style was naturally risk-averse and stayed within his comfort zone. My personality was much more oriented to taking frequent trades and keeping my losses under control. Trevor recalls, this worked very well for me because very rarely would I have a day that would get away from me. We hear many generalizations about the best or right way to trade. Trevor's insight was that his trading had to fit who he was. His success came from sticking to his basic strengths and interests. Discipline. This makes or breaks traders from what I saw. Trevor points out, when you are trading your own money with no risk manager breathing down your neck, you better have discipline. Without it, it will be just a matter of time before you blow up and are unable to recover. Indeed, this discipline is what makes the learning curve possible. I was often early on many trades because I lacked the patience to let.
Let's see. How cold is it right now? Let's see how cold it is. It's not cold right now, but it was like fucking 50 degrees the other day. Come on now. See how cold it is out here. Weather. Why isn't the weather working here? 30. No, that's not right. Hold on. It says it's like 33 degrees. But that's like an hour away. But yeah, you get the point. Yeah, it's about 40 degrees, 30 degrees out here. Yeah, 30, 40 degrees. That's warm weather out here, man. Shit, I can be out there with no shirt right now and some shorts. As long as the wind is not kicking, I'm good. But yeah, that's warm weather out here, man.
Lessons from Trading Professionals 273. The trade playout. Trevor explains. Fortunately, I had the discipline to work my way out of the trade and try over. This is an excellent point. Discipline doesn't mean not making mistakes. It means making mistakes the right way, particularly when you're building your competence and confidence. It's important to learn how to work your way out of the trade. Positive experience can build optimism, but it's the ability to work out of difficult situations that yields the confidence that you can handle most anything the market can throw your way. First and foremost, good traders are good risk managers. Michael described his 3 most valuable steps in self-coaching as 1. Keeping a detailed trading journal. 2. Becoming an amateur trading psychologist. And 3. Listening to trading affirmations. This reflects a balance that I see among many experienced, successful traders, always working on their trading, and always working on themselves. Keeping a journal. The thing that's helped my development the most, Michael explains, is keeping a proper, detailed trading journal. I've always prided myself on my ability to remember and learn things solely by memory. Writing things down just seemed like unnecessary work. That all changed a few years ago when I hit a rough spot and decided to reassess things. I went back to basics and did things according to the advice of what I'd read in all those books over the years. Mainly create a detailed business plan and keep a journal. In just a few weeks of keeping a detailed journal, a few self-defeating behaviors jumped out at me. I was amazed at how those behaviors never registered with me previously. For example, I discovered that I had a bad habit of adjusting my initial stop losses too soon. That often resulted in stopping myself out of winning trades at break-even. Fixing that one thing has added considerably to my bottom line. I have experienced the same thing. In keeping records of my trading, I learned things about my performance that I had never recognized earlier. Often, it's just a few tweaks to what you're doing that makes the difference between break-even and profit. The advice you see repeated in one trading book after another is often the best advice, because it's the result of years of experience.
Read this book, and then we'll work out. You guys gonna ride out all day, man. I'm gonna have this live stream all day. I'm gonna have this bitch for like 8 hours. Live stream for 8 hours.
Becoming an amateur trading psychologist. I had picked up bits and pieces about trading psychology over time, Michael notes, but it wasn't until I read a book dedicated to the topic that things really jumped for me. The book I read was Trading in the Zone by Mark Douglas. The book crystallized all those bits and pieces I picked up, as well as forced me to take a look at my own beliefs and behaviors. It's one of those books in which I get something different each time I read it. Long before I read Trading in the Zone, I knew logically that trading was nothing but a game of probabilities. I knew all about expectancy and that I could still make money, even if I had more losing trades than winning trades. Yet there was a disconnect between my knowledge and my actions while actually trading. The book made it very clear to me that I needed to accept that I won't know, nor do I need to know, how any given trade is going to turn out. It made me realize that, as long as I stuck to my business trading plan and kept taking good setups, I would make money over time. When we become our own psychologists, we bridge the gap between what we know and what we feel. Listening to trading affirmations a few years ago, I purchased a CD called Trader Affirmation from the Day Trading Course site, www.daytradingcourse.com/CD/ Michael recalls. The CD has about 30 minutes of someone reading a list of affirmations to help the trader's state of mind. I try to listen to the affirmations at least twice a week, usually while I'm showering in the morning. The affirmations help me to remember all the things I've read in the aforementioned book on trading psychology. Listening to them has been a great help in keeping my head on straight. To be honest, I've never been a big fan of the whole idea of positive thinking and affirmations. I haven't heard the CD that Michael uses, but I have to say that what Michael says makes a great deal of sense. It's not enough to read a book on trading psychology and file away the lessons. Rather, you need to repeat those lessons in order for them to sink in. That has become a part of Michael's weekly routine, helping him cement his efforts at becoming his own psychologist. Your assignment for this lesson is to identify and implement one weekly routine to help you internalize sound trading practices. This raw time could be listening to a CD or even your own self-recorded messages, or it could be a structured review of your trading journal with a colleague. Lessons from Trading Professionals 275. The idea is to make right thinking and right action a regular part of your experience, so that you become your ideals. Coaching Q. Check out Michael's insights into trading journals at http://tradermike.net 2005/08/ on trading journals and http://tradermike.net/2005/08/ thoughts on day trading moving stops. See also Charles Kirk's insights in this chapter. Lesson 84. Mentor yourself for success. Brian Shannon is a trader and an educator of traders. His Alpha Trends blog, www.alphatrends.blogspot.com, utilizes video to illustrate trading patterns each day, a unique resource for developing traders. He has captured many of the principles from these videos in his book Technical Analysis using multiple time frames. Brian's work is a great illustration of what I call contextual thinking, placing observed patterns into larger contexts to gauge their meaning and significance. I find that many short-term traders run into problems when they become so focused on the patterns over the past few minutes that they miss the larger picture of what the market is doing from hour to hour, day to day. By gauging patterns within larger contexts, we stand a greater chance of aligning ourselves with longer time frame trends. Corey Rosenblum is a full-time trader who chronicles his work in his Afraid to Trade blog, www.afraidtotrade.com. What I like most about Corey's work is that he blends an awareness of trading psychology with an understanding of the psychology of markets. His site provides a number of trading insights, as well as insights into the minds of traders. I grouped Brian and Corey for this lesson because both describe the ways in which they mentor themselves, guide their own learning processes, as part of coaching themselves for success. Brian's response to my query about the 3 things that have been most valuable to his self-coaching reflects his trading as well as his teaching. Let's take a look. Tuning out opinions. Brian stresses that he doesn't completely ignore what he hears from others, but he's learned to emphasize his own views from what he's learned over the years. The edge in trading is so small and quite often 276. The Daily Trading Coach. elusive that it is imperative to understand market dynamic structure and where my personal edge lies. He points out, this is very important, as Brian's videos illustrate. He is extremely open to information from the markets, but he filters out opinions. He has learned to rely on his own judgment and experience to maintain his advantage in the marketplace. This reliance is essential in building and maintaining confidence. It's difficult to imagine sustaining the resilience to weather drawdowns if you don't have a basic trust in how you process, inform, and make decisions. It is better to make a mistake with your own judgment and learn from that than to make a lucky trade based on the tips of others. Review when you view markets and review them day after day, week after week. You develop an intimacy with market relationships and trading patterns. An internalization of this intimacy is what traders refer to as a feel for markets. It is not mystical inspiration. It's the result of repeated exposure to information under proper learning conditions. Brian explains, I review hundreds of stocks using multiple time frames in an attempt to find what I believe to be the lowest risk, highest potential trades according to my entry and exit parameters. This review provides him with good trade ideas, but it also feeds a learning curve. After so much review across multiple time frames, he has learned what a good stock looks like. This internalized expertise helps him deploy his capital in the most efficient manner possible. We learn our patterns and the patterns of markets through intensive review. It is the intensity of the review that enables us to internalize those patterns and become sensitive to their occurrence. Mental checklist. Here I'll let Brian speak for himself. This one is somewhat new and came about as a result of letting my guard down on a few occasions earlier in the year, which resulted in losses which were larger than what I would normally take. Each day before the market opens, I go through a mental checklist of how do I feel, tired, anxious, excited, etc. to identify any possible weakness before I commit money. I also try to visualize how I will react to what I view as either normal or abnormal trading conditions. I am trying to spend more time on the mental preparation than I have in the past, and it seems to be working well.
Sweet, man. Shit, Rollins up $10,000, man, on BTCS. The fuck? He's up 9,500. Good for you, boy. Good job, man. Boy's up some money. Rollins up 9,500 on BTCS. You go, boy.
Lessons from trading professionals 277 for me. Time and again, I find that this is what winners do. They learn from their losses and adapt. Trading requires an active mindset. It's a bit like patrolling enemy territory, where you have to be on the alert for surprises at all times. If you're not prepared and haven't rehearsed that preparation, you won't be able to act on instinct when those surprises hit. Brian let down his guard, and he was surprised. He created a mental checklist and incorporated visualizations of what-if scenarios and sharpened his active focus, anticipated what could go wrong, and enhanced his results. Corey's 3 best practices for self-coaching were: 1. Find a trading partner group. 2. Think in terms of concepts. And 3. Keep an idealized trade notebook. All 3 practices reflect the progression of his learning as a trader. Find a trading partner group. The first thing I learned when I began trading full-time, Corey recounts, was that trading could be an extremely lonely, isolating experience. It can be difficult to sustain motivation when you're the only one who knows what you're doing, and friends and family may not understand what trading is all about. Trading can be quite difficult, and it is immensely helpful to have at least a handful of solid friends or colleagues who understand your strengths and weaknesses while supporting one another for mutual benefit, such that the whole is greater than its parts. I began writing the blog initially as a way to reach out to others who had similar experiences. That has made an ultimate difference in my trading, mostly from the interactions and idea sharing with others, which has broadened my awareness. I also have one experienced trader locally with whom I meet almost every evening to discuss the day's events and share ideas and study markets. This interaction has challenged us both, and we bring a combination of skills that benefit us academically, combined research, emotionally, motivation, and financially, improved trading tactics. Form a team to make trading personally rewarding and stimulate ongoing learning. Think in terms of concepts. I think the largest shift in my performance came when I began to view markets and price behavior conceptually, rather than being.
Fucking internet, man, is off. The fuck?
278 The Daily Trading Coach. Driven by indicators or news reports, Corey explains, this was a process that took time and was difficult for me. Previously, I viewed multiple indicators and believed those were the secret to trading success. However, too much conflicting information was not only frustrating, but unprofitable. Even when I decreased the number of indicators, I still struggled to find profitability. My results were often no better than random entries, which was endlessly disappointing. The shift came when I was able to view markets and price behavior conceptually. The shift happened slowly and was attributable in part to studying market profile information, such as the concepts of trend day, bracketing markets, auction dynamics, time frame participation, etc. Other concepts were based in the teachings of the early founders of technical analysis, including momentum, price range, expansion contraction, broader trend structure, dynamics of price behavior, and price patterns, with their underlying reasons, accumulation or distribution, reversal or continuation. Essentially, the shift was one towards greater understanding of price behavior and participation by all sorts of market participants. To further the conceptualization switch, I also began researching the broader concepts of intermarket analysis, which compares markets to each other, and sector rotation, which details performance of equity sectors and expectations. I began to see markets as a grand chess game, which opened up a new method of perception. Markets clearly do not trade in isolation. When you think in concepts, effects. You understand why markets move, and that helps you formulate promising trade ideas. Keeping an idealized trade notebook, Corey explains, in addition to keeping a simple spreadsheet that tracks trading performance, which is essential in knowing when you're making mistakes and correcting them, I use a different kind of track. I'm journal that I call my idealized trade notebook. In this notebook, I print off the intraday chart. I use the 5-minute chart most frequently, of the stock or index I traded for the day. Also, if there are particular charts I find interesting, I annotate by hand what I deem to be ideal or best. Trades based on my understanding of price behavior and opportunity. Through looking at the charts at the end of the day without the pressure of real-time trading, I am able to see new patterns that I had missed. I then overlay my fills to see how close I came to achieving the total potential move. This serves a dual purpose of deeper visualization of my performance, but more importantly, helps clarify the lessons from trading professionals. 279 distinct patterns and trade setups I use for trade entry, management, and exit. By tracking ideal trades, we internalize best practices. Following Brian and Corey, your task for this lesson is to structure your process of review. One task should include a review of the market day, comparing your trades to the actual moves in the market, so that you are learning both about you and about the patterns you want to be trading. Mentoring yourself is not an occasional activity to be performed during losing periods. Rather, among the best traders, it is a regular process embedded into each trading day. Compare what you did with what you could have done is a great way to track your progress and bring yourself closer to your ideals. Coaching Q. When you coordinate your learning with a trading partner, compare your ideas of the best setups for the markets you are trading. If you see markets through the eyes of others, you can enrich your own pattern recognition. Lesson 85. Keep detailed records. 2 of the respondents to my question, 2 whose work I followed for years now, independently arrived at similar answers. This is not because they trade similarly. Instead, it's a reflection of the wisdom they've accumulated over years of tackling markets and honing their own performance. Charles Kirk is a trader, portfolio manager, and author of the Kirk Report blog site, www.thekirkreport.com. He also maintains a portion of his site for members, who are treated to his stock picking tools and selection. Much writing focuses on when to trade. Charles's forte is selecting what to trade. His blog is among the few on the web that comprehensively links to articles on key themes that deal with markets and the economy. This is a particularly valuable resource for those who want to stay on top of the market's larger picture. If you want to see how institutional money might move markets, it makes sense to focus on the themes tracked by institutional money managers. Charles seems to have a knack for identifying those themes. 280 The Daily Trading Coach. Jason Goatford is the editor of the Sentiment Trader site, www.sentimenttrader.com, which, as its name suggests, focuses on measures of market sentiment. Jason freely offers his perspectives on markets and also shares the results of his tests of historical market patterns. He collects a large amount of data on markets and assembles the data in unique ways to uncover possible edges. These data provide information to guide traders' thinking, as well as food for specific trade ideas. A particularly interesting facet of his service is the tracking of relative smart and dumb money, including unique ways of reading options sentiment. In response to my question of what has most helped his self-mentoring, Charles Kirk provided a single, detailed response. His Boo book. Boo stands for Book of Observations, and it is a collection of his trading experience. In this book, he explains, I keep a detailed track record for every trade I've made, along with observations about the market and things I've learned from others and from monitoring my own success and failures. My Boo book contains specific and detailed information on every strategy and screen I use, along with detailed performance information over different periods of time. In essence, everything I've learned up until now can be found in this book. Significantly, the contents of the book are organized in a database called Do Organizer, www.gemx.com, which enables him to readily access any idea that he's written about. A database turns a trading journal into an active research tool. Charles indicates that the database keeps his thoughts organized, as a scientist might systematically record data and observations from laboratory investigations. Treating the market, and a strategy, from a scientific, evidence-based approach in this manner was helpful to me to keep me focused, disciplined, and on the right track. He explains, this also helped me to test new strategies and to recognize early when certain strategies stopped working in specific market conditions, so I could adjust and transition my trading as needed. He also uses the Boo book to track new strategy ideas that he wants to integrate into his own trading. I consider myself a perpetual student of the market, and maintaining and using my Boo book has been incredibly helpful in this regard. He notes, indeed, Charles explains, looking back, the biggest mistake of my trading career was not starting my Boo book sooner. It took me several years to understand the importance of keeping notes in an organized manner while using a scientific, evidence-based approach to test and improve my skills and strategies. The Boo book is a great example of the creative strategies that successful traders utilize to identify and hone their strengths, I believe. Lessons from Trading Professionals. 281 Charles's key insight is that the ideas in his book must be organized to be maximally useful. By placing his journal in a database format, he is able, with a few keystrokes, to access relevant experience from a broad time period. Journals can become unwieldy over time, and it is difficult to pull material from past entries. Increasing his access to his experience has enabled Charles to keep the past relevant to the present as a source of learning. When I asked Jason Goatford to share his 3 greatest sources of self-coaching, he started with an idea similar to Charles Kirk's. Write down every idea. I've written close to 5,000 comments publicly over the past 6 years. Jason explains, and also keep a personal journal that tracks more soft subjects such as how I'm feeling, anecdotal evidence, clips of headlines on news sites, etc. I review all of these periodically and find that they are exceptional tools in several respects. They keep me honest, not getting too ahead of myself when trading well and not too down when not, and they also serve as a check for when I'm anxious about a trade. I've looked at how I felt right before putting on past winning trades and saw that I was anxious then, too. So what I'm feeling now isn't necessarily some 6th sense subconsciously hinting that I not put on a trade. Talking to more accomplished and experienced traders, Jason notes that he meets many successful traders through his Marquette service. I am always struck that most of them suffer through the same travails as the rest of us. He points out, they all get emotional at times, but they never let that seep into their risk control control discipline, and that discipline is constant. There is no deviation from the strict principle that no one trade will sink them or their career. That is something I have written down in front of me. Risk control is paramount, and it is something I use as a mantra. It's okay to be emotional. It's not okay to let emotions change your management of risk. Always learning new things, it's a cliche. Jason acknowledges, but I've found that the more I learn, the more I discover how little I know. That helps tremendously in trading, as it has helped me to find new ways to approach old problems. Market dynamics are always changing, so we need to find ways. $282 The Daily Trading Coach. To adjust as conditions change, learning new trading strategies or new ways to test old ones can be very fruitful. It's a lot of work, but anyone afraid of hard work shouldn't be risking his or her capital. It isn't just trading related stuff, either. I try to push myself into uncomfortable situations and experience new places, new people. That helps broaden my perspective so I don't get closed-minded to new approaches. What most struck me about Jason's insights was that writing thoughts down led to self-discovery. When he tracked his trades and emotions, he found that he was often nervous prior to winning trades. This tracking helped him not succumb to nerves when putting on a trade. It is this constant desire to learn new things about self and market that keeps trading challenging and interesting as a career. Tracking also helps the trader adapt to shifting market conditions. Jason Goatford and Charles Kirk are not afraid of the hard work. They spend a great deal of time developing, reviewing, and testing their strategies. There is nothing get-rich-quick about their approaches to markets. Their record-keeping is their way of sustaining a learning curve. Your assignment for this lesson is to create an indexing system for your own trading journal, so that you can track themes associated with what you're doing and how well you're doing it. Tracking means categorizing your trades by strategy setup, by markets, by results, and by your specific market and personal observations. Keep a journal in electronic form, such as through the stock ticker service, www.stockticker.com, as one way of indexing your ideas. Another method is to turn your journal into a trading blog, with tags for various topics. Still another approach is to maintain your journal in a formal database, like Charles Kirk. Your records need to be living, breathing entities that you can frequently review for insight and perspective. Imagine your trades organized by market, market condition, trade setup, time of day, and size, so that you can pull up your results for any given market situation. Organized in this manner, your experience may just become your greatest trading coach, as it has been for Charles and Jason. Coaching Q. Consider a portion of your journal devoted solely to research, developing and tracking new trade ideas. Charles and Jason continuously search and research for trade ideas as market conditions change. What is working in the current market environment? Which stocks are moving? Which patterns are showing up? Journal about the markets as well as about your trading to help you anticipate opportunity. Lessons from Trading Professionals 283 Lesson 86. Learn to be fallible. Dave Mabe is a trader, system developer, and founder of the stock ticker service and site, www.stockticker.com. Stock Ticker is a unique resource because it enables traders to track their ideas and performance in an online format that can be shared with selected groups of traders. This Web 2.0 approach to developing ideas and tracking progress enables traders to build their own community of like-minded peers. The Stock Ticker site also includes an informative blog featuring interviews with traders who share their work online. I particularly like how Stock Ticker has created a true online trading journal, making journaling a social activity. It gives traders control over what they share and with whom. Indeed, there is huge potential simply in the idea of sharing a real-time journal with a trading coach. Chris Peruna is a full-time trader and blogger whose work can be found on the site that bears his name, www.chrisperuna.com. His site is devoted to successful investing through education and covers topics ranging from screening for fundamentals among stocks to position sizing and charting. He shares his stock screens with readers, along with specific trade ideas. I like how the site enables traders to learn from his example. Let's take a look at how these two pros responded to my question about what has been most helpful to their self-coaching. Starting with Dave. Trading Journal. Dave asserts, a trading journal is by far more powerful than any indicator or platform. It provides the foundation for everything I do as a trader. Your mind can play tricks on you, but your execution data don't lie. Being able to reflect upon my trading results allows me to step back and view results in aggregate to see how I'm measuring up to my goals. I've seen this with many successful traders. The journal offers a layer of accountability and focus that would otherwise be missing. Dave also stresses the importance of flexibility in goal setting via journals. Instead of setting a single goal, for example, a certain dollar amount over a time period, I find it much better to set a range of goals from conservative to radical. A lot of traders will set high goals, which set them up for devastation when they aren't achieved. We often focus on what we want to see. Statistics on our trading patterns don't lie. They focus us on what we need to see. $284 The Daily Trading Coach. Learning to be wrong. Most beginning traders have a tremendous need to be right and are resistant to admitting they might be wrong. Dave observes, I learned quickly that being right, that is, having a high win rate, doesn't correlate well with making money. Win rate is overrated. In fact, one of the most profitable strategies I've traded had a winning percentage below 30%. Dave is right. Most good traders I've worked with are not far from a win rate of 50%. Their success comes from knowing when they're right, and taking full advantage, and knowing when they're wrong, and minimizing losses. Overcoming the psychological need to be right is essential to success. Without that, it's too easy to take profits early and remain stubborn in losing trades. Automate. Dave recounts, I've spent my trading career trying to remove as much of my discretion as possible from my trading. Many aspects of manual trading systems can be automated. The benefits of automation are numerous. More consistency, less time spent doing trading grunt work, and fewer mistakes. I found that the more automation I have in my systems, the better my results. This includes my manual trading systems all the way to 100% completely automated trading systems that I trade. His point is well taken. Even with discretionary trading, execution can be automated so that decisions can remain strictly rule-governed. The simple step of trading with limit orders rather than at the market can make a meaningful difference in performance over time. As traders enter and exit trades at favorable levels, rather than chase markets and get themselves in and out at the worst possible times. Chris Piruna's responses will ring true to traders who have traversed their initial learning curves. He focuses on some of the universals of successful trading. Understand me. The most powerful tool I have found in life and in this specific case, the market, Chris explains, is what I, as a person, am capable of doing. I finally understand that personal characteristics that are ingrained in my DNA will only allow me to trade successfully under specific circumstances. For example, I am much more consistent and profitable as a medium-term and longer-term trend trader than as a day trader, even more so on the long side. I don't need to be everything all the time as long as I continue to focus on the areas that bring me the greatest. Lessons from Trading Professionals 285 Success. Understanding me has been my holy grail of understanding how to trade the market with consistency and profitability. Chris's insight is critically important. You don't make yourself fit a market or trading style. You find the markets and styles that best fit you. Successful traders trade within themselves. They stick to what they do best and ignore the rest. Find what you do best and fashion trading strategies around that. Learning to cut losses, it's almost cliche. Chris points out, but not many people can do it in any aspect of life. I have learned to cut losses in my trading, my career, my hobby of competitive poker, and everywhere else in life where the rule applies. Without this rule, there wouldn't be a third rule. Chris makes a valuable point. You can live one way and trade another. It's hard to imagine being totally disciplined in trading and LAX in other areas of life. Good trading practice is a philosophy of living, pursuing opportunity, managing risk, limiting losses, and diversifying positions. Chris trades the way he lives. Study and work hard. It is difficult to find a successful trader who does not place hard work at the center of what she does. It is extremely important to my success for me to continuously study the markets on a fundamental and technical level and learn from my successes and mistakes. Chris points out, applying the knowledge gained from past experience allows me to properly analyze similar situations in the future with slightly greater odds of success. Never stop learning is a phrase I will never stop saying, as it proves to be truer as I get older. Notice how both Dave and Chris emphasize the importance of knowing when they're wrong. This is an important difference between beginning traders and experienced ones. The beginners focus on being right. As Chris pointed out, beginners try to avoid being wrong. The experienced traders know they'll be wrong on a significant proportion of their trades and fully accept that. Their self-coaching is designed to help them anticipate and manage losses, not avoid them. They have a plan for each trade to deal with loss, and they have an overall trading plan to deal with periods of drawdown. Your assignment for this lesson is to use your trading journal to flag your fallibility, identifying the 5 largest losing days in the past. $286 The Daily Trading Coach. Year. What did you do wrong on those days? What could you have done differently? What were the problems that occurred on more than one of these losing occasions? The idea is to embrace your fallibility by turning it into an engine of learning. If you clearly identify the mistakes from your worst trading days, you'll be better prepared to avoid them in the future. Your worst trades can be your best tool for self-understanding, and your best guide for self-coaching. Coaching Q. As you review your trading, make a special study of how you exit trades. Do you tend to exit too early, so that you leave potential profits on the table? Do you tend to overstay your welcome, so that potential profits are retraced? Take it a step further. What could you have looked at to stay in the trade longer or to exit sooner? How can you best adjust your exits to the market's level of volatility? If you refine your exits, you can break your trading down into components and turn observations into goals for improvement. Lesson 87. The Power of Research. Rob Hanna is a trader and the writer of the Quantifiable Edges blog, www.quantifiableedges.blogspot.com, a unique site that tracks historical patterns in the stock market. His electronic newsletter goes out daily, detailing the trades he places from his research. For traders, the blog and newsletter are unique tools that can extend their market edge. I particularly find historical patterns relevant to discretionary trading, as we'll see in Chapter 10. With a sound understanding of historical performance, we are in a great position to identify markets that are following their usual patterns and those that are not. Both scenarios can generate excellent trade ideas. Jeff Miller is a money manager in Naperville, Illinois, who also shares his ideas about markets and trading through his blog, A-of-Insight, http://oldprof.typebook.com. He frequently challenges accepted trading wisdom and offers perspectives on markets that reflect his disciplined analysis and understanding of economics. He has researched trading systems and uses those systems in his portfolio management. Like Rob, Jeff suggests that he tests ideas before he trades them, giving him confidence in risking his capital. Rob's answer to my question of what he's found most helpful to his self-mentoring as a trader was quite simple. Research, and Lessons from Trading Professionals 287 Research. He explains, I know that sounds like one answer repeated 3 times, but it's not. It's the top 3 answers. I've been through several stages in my career and traded using different methodologies. The one constant I've found with any method of trading I've employed is that it takes a substantial amount of research outside of market hours to successfully implement them. Rob Hanna started his career day trading, focusing on short-term setups, such as those described in Jeff Cooper's Hit and Run books. What Rob found most useful was not the setup patterns, but the screening for volatile, trending stocks to implement the strategies. He began creating his own scans based on trading patterns, focusing on trades with the best risk-reward. I wrote down each potential trade in a notebook along with the trigger price for the next trading day. Rob described, when the trade was done, I would log the results in my accounting software. I kept a field in the accounting database called Reason. It was there I entered the name of the setup I used to initiate the trade. This is a theme we see time and again with successful traders. They track their results meticulously to aid their learning curves, keeping records of trades that work cement success patterns in your mind. Rob Hanna points out that that keeping his trades in a database accomplished 2 goals. It forced him to have a reason for every trade, and it enabled him to track his results as a function of the trade setups employed. It made it extremely easy for me to determine which setups worked best and which ones struggled. He explains, by doing this, I knew which setups I should continue to focus on and which ones I should scrap altogether. When Rob didn't have a solid reason for a trade, he simply entered the word hunch as the reason for the trade. It didn't take long for me to figure out how much the hunch trades were costing. He recounts, he quickly scrapped trading from hunch alone. The second phase of Rob's research occurred when he switched to longer-term trading that utilized patterns inspired by William O'Neill's CanSlim approach. Rob began to utilize technical screens with the TC2000 software from Word & Brothers, with his final lists filtered through fundamental criteria. With TC2000, he describes, I am able to easily place notes on the chart. This is incredibly useful. If a stock pops up with an interesting pattern, I may have already researched that stock in recent weeks. With the note feature, I can see if I already checked the fundamentals and rejected it for some reason. No need to waste time looking up the same symbol over and over. As with the day trading patterns,
In many areas, small businesses have an advantage. In other businesses, scale has a huge advantage. And I mean, you don't want to be a tiny carbon steel producer. On the other hand, when mini mills came along and learned how to use scrap more effectively than the older methods of making steel, they actually had an advantage. So scale is a huge advantage in some businesses. I take care of my customer, and that wins. We have a business in Omaha, some of you may have heard of. It's the largest home furnishing store in the world. In Omaha, which only has an SMSA of 650,000 people. It's on 72 acres. It does $325 million in one location, which happens to be $500 for every man, woman, and child in the SMSA, but it draws from beyond that. That business comes about, or has resulted from an investment of $500 in 1937 by a woman who walked out of Russia in 1921. She walked out, got on a peanut boat, landed in Seattle with a tag around her neck. She couldn't speak one word of English. The American Red Cross looked at the tag. It said Fort Dodge, Iowa. They got her to Fort Dodge, Iowa. She couldn't pick up the language. She was there 2 years. She said she felt like a dummy. So she came to Omaha because there were other Russian Jews there and she'd at least have somebody to talk to. Her little girl started school, Frances. Frances would come home at night and teach her mother the words she learned in school that day. That's how this woman, Rose Blumpkin, learned the English language, but from her daughter from kindergarten on, teaching her the words. She brought 7 siblings over from Russia, one at a time, $50 every time she saved $50. She sold used clothing and all the works. She got her 7 siblings over, her mother and father, and by 1937, 16 years after she got here, she saved $500. She got on a train, went to Chicago, to the American Furniture Mart, which was this huge, impressive thing. She was smart as hell, but she thought like a peasant in a way, and she saw this building and she decided to name her company the Nebraska Furniture Mart. She went in and bought $500 worth of, she bought about $2,000 worth of merchandise. All the way back to Omaha, she worried because she thought, I owe $1,500, and she only had a $500 equity. So she got to Omaha. She took the bed, the sofa, the refrigerator out of her own home to sell fast so she could get the money so she could pay on time. She took that business and built it from that start. No one would sell to her. She went into court 4 times because the carpet manufacturers tried to keep her from selling at a discount, and she went into court and told the judge, because she figured out ways to buy this stuff in various nefarious ways from had other people buy it for her. And she said, look, I pay $3 a yard for this carpet. Brandeis sells it for $6.98. She says, I sell it for $3.98. Just tell me, Judge, how much you want me to rob people. She defended herself. Papers wrote it up. The judge bought carpet from her the next day. I mean, it was marvelous. Brandeis isn't selling anymore. They were the huge department store in Omaha. She put everybody out of business. And the punchline, she worked till she was 103. She sold me the business when she was 89. And she didn't have an audit. I went out to see her one afternoon. I took a check out with me because I knew she wanted to do something. And I said, Mrs. B, here's the money. I said, I don't need an audit. Just tell me whether you owe any money. She said, I've never owed any money since I owed those guys back in 1937. And she said, it's all free and clear. She'd never seen a balance sheet. She didn't know what accounting terms meant, but she understood the nature of the business. And I told her, I said, I'd rather have your word, than an audit from every one of the big 6 or big 8 or whatever there were, the number at the time of the top auditing firms. And she worked till she was 103. She died at 104. She had 3 siblings at her funeral. I mean, those are some genes. Her son works there now. He's 82 or 3, and the 3 sisters are all alive. But the punchline is, she couldn't read or write. This woman could not read or write. If you told her this room was 68 feet by 43, she would tell you how many square yards it was like that. She never went to school a day in her life. She would tell you how much that was at $5.98 a yard. She'd add the tax. She'd now go something because she liked your looks. And that would be it. And that's, you know, that is that, you can't beat that, you know, and you can't replicate that at General Motors. You can't institutionalize that. The person who brings that kind of drive to a business and does it day after day and thinks about their customer, and that's all she did. And well, she raised 4 kids in the process too, but you can't, it can't miss. And no, you don't have to worry if you're an entrepreneur. In most fields, there's some fields where you can't do it because there are scale aspects to it. But in most fields, you know, you'll kill people. Bob Shaw did that with Shaw. Nobody ever heard of Shaw in carpet 30 years ago, and he's got 40% of the carpet business in the country. So it's a great field of opportunity out there, and I don't know about trucking specifically, but I wish you the best on it. And you won't be at a disadvantage in many fields if you're small, and you'll actually have an advantage.
That was Warren Buffett. Warren Buffett.
Lessons from Trading Professionals 287 Research. He explains, I know that sounds like one answer repeated 3 times, but it's not. It's the top 3 answers. I've been through several stages in my career and traded using different methodologies. The one constant I've found with any method of trading I've employed is that it takes a substantial amount of research outside of market hours to successfully implement them. Rob Hanna started his career day trading, focusing on short-term setups, such as those described in Jeff Cooper's Hit and Run books. What Rob found most useful was not the setup patterns, but the screening for volatile, trending stocks to implement the strategies. He began creating his own scans based on trading patterns, focusing on trades with the best risk-reward. I wrote down each potential trade in a notebook along with the trigger price for the next trading day. Rob described, when the trade was done, I would log the results in my accounting software. I kept a field in the accounting database called Reason. It was there I entered the name of the setup I used to initiate the trade. This is a theme we see time and again with successful traders. They track their results meticulously to aid their learning curves. Keeping records of trades that work cements success patterns in your mind. Rob Hanna points out that keeping his trades in a database accomplished 2 goals. It forced him to have a reason for every trade, and it enabled him to track his results as a function of the trade setups employed. It made it extremely easy for me to determine which setups worked best and which ones struggled. He explains, by doing this, I knew which setups I should continue to focus on and which ones I should scrap altogether. When Rob didn't have a solid reason for a trade, he simply entered the word hunch as the reason for the trade. It didn't take long for me to figure out how much the hunch trades were costing. He recounts, he quickly scrapped trading from hunch alone. The second phase of Rob's research occurred when he switched to longer-term trading that utilized patterns inspired by William O'Neill's CanSlim approach. Rob began to utilize technical screens with the TC2000 software from Word & Brothers, with his final lists filtered through fundamental criteria. With TC2000, he describes, I am able to easily place notes on the chart. This is incredibly useful. If a stock pops up with an interesting pattern, I may have already researched that stock in recent weeks. With the note feature, I can see if I already checked the fundamentals and rejected it for some reason. No need to waste time looking up the same symbol over and over. As with the day trading patterns, 288 The Daily Trading Coach. Setups were less important than the work that went into implementing them. Once again, he notes, I found it was the research and not the trading that made me the money. In Rob's third phase of research, he has formally backtested his trading ideas, using Excel and TradeStation as primary tools. This backtesting has enabled him to generate actionable trade ideas. As he puts it, I love taking these trades because I have a good idea of my success rate and profitability expectation going in. Reviewing a variety of price, breadth, volume, sentiment, and other indicator data helps him develop a view on markets, but it also helps me to unveil what is truth and what is lore with regards to conventional market wisdom. There is so much information out there. It's difficult to know what's valuable and what information is simply hype. There is great value in